The labor plan allows you to optimize every aspect of your company's labor costs over the next year. This tab considers your various labor categories such as 1. Direct labor, or what is also called your production labor, which are those who actually produce your offerings. 2. Contract labor, which is usually temporary labor where no employee taxes or benefits are paid. 3. Fixed labor, or what is called administrative labor. And 4. Sales or commission compensation. But this is covered in the video called Labor Plan Part 2. When you receive your control panel, it will already be populated with your employees' names and their compensation as it is here. Your employees' information will be input into the proper categories as long as we get that information from you. You will want to customize this column that has the number of hours worked by your part-time and full-time employees. As we scroll across to the right, you will see each employee's gross monthly payroll. Scrolling down a bit, you will see your forecasted total monthly payroll. Scrolling down a bit more, you will see the burden costs of your employees, such as workman's compensation, health and dental insurance. And although it is not visible here, it also includes your matching taxes, such as FICA and federal and state unemployment. As long as you gave us this information during the intake process, this will all be populated for you. As we move back to the top, we have a place to input the total number of employees along this row. This next row shows us your projected overtime in advance. The information here is driven by the revenues that you forecasted on your Revenue Forecast tab and, if you chose to use it, your Revenue Drivers tab. This row is titled Overtime Hours Per Person Per Month. This means that these 15 hours in May are not 15 hours of total overtime, but 15 hours times 13 employees, which would equal 195 total overtime hours for the month. Since this business owner pays his employees on average $16 per hour, that would be an overtime cost for the month of over $3,100. This overtime calculation is based upon several factors, including what this person charges per hour for his employees and how efficient they are. Let's look at 3 ways to eliminate overtime. First, we can simply raise prices by $9 per hour and his overtime goes away. That, however, may not fly with his customers. So then we could challenge his crews to become more efficient by just 7%. That would also cause the overtime to go away. Perhaps some combination of these two would be ideal. But there is always the third option, which is to simply add another employee. And as you can see, that makes the overtime go away as well. But now we added the expense of another employee, and that additional expense needs to be accounted for down here, and his monthly wages show up over here. You probably noticed that when this business owner hired that new 14th employee in May, so he wouldn't pay the overtime, it added his compensation for the full year instead of just starting in May. When we input an employee's information, the compensation automatically begins in January. To fix this, we highlight January through April and simply hit the delete button. Let's say you later decide to hire this employee in April instead of May. You may copy the formula from any adjacent cell back into the cell for April like this. Likewise, let's say an employee leaves your company in July. We simply highlight July through December and hit delete. But if the employee worked for half of July, we manually type in what those wages were. Since what is happening on the labor plan exports directly to the labor categories in your budget, we want to be as accurate as possible. A $1,000 error here will definitely impact your profit and cash flow forecast. You might wonder why not just eliminate an employee completely who leaves the company. That has 2 negative effects. First, you lose the prior month's cost for that employee, which will make your past month's budget and your total annual budget off by that employee's wages. And secondly, you are creating a valuable employee history that can be used for planning next year as you record how many employees you had and when they worked and what they were paid. Your control panel creates a valuable archive of your company's performance. This labor tab starts out as a plan for the year, but at the end of the year, it is a true reflection of your actual labor demands. You will probably want to give increases to certain employees throughout the year. This is where we provide for that information. we simply type in the increase that we want to give into this column next to the employee's name. It must be reflected as a percentage and not a dollar value. To arrive at the percentage, you take the amount you want to increase the wage by and divide it by their existing wage. For instance, a $1 increase to someone who is making $10 per hour would be a 10% increase. Then, we click on the Month Applied cell and a drop-down menu appears. Select the month that you want the raise to take place, and you will see that the increase appears starting in that month. Next, we will look at your need for contract labor. Contract labor has its own area since we do not want to calculate and add any labor burden to this category, but all other options are available here as in any other labor area. One exception is that the column called Salary is relabeled as Weekly Rate, which is more consistent how contract laborers are compensated. If someone works less than a week, simply type in the rate that you would pay him if he did work for a week, and then change his work week to the appropriate number of hours. Let's say this person works 2 full days per week, so we change this 40 to a 16. If it is easier, we also have the option of simply typing in here the amount of compensation we expect this person to make each month. Remember, if you ever type into an area which has an existing formula and then change your mind, you can copy back the formula into that cell from any direction. By scrolling down a little more, we see the monthly grand total for all of your direct labor, as well as the monthly percentage of labor. Since labor is often the single largest expense in any company, every business owner should be intimate with what those labor percentages are for each category. Finally, we scroll down a little further and we see the fixed labor category. Your fixed labor category doesn't have a labor cost per person per hour or an efficiency rate calculation because it doesn't relate to production. We do have 2 additional inputs not found in the direct labor category, however. The average employee hours worked per week enables you to take fixed labor seasonality into consideration. Since many industries have peak periods where lots of work is required from the administrative staff, we account for this here. Let's say in the month of July, it is common for the administrative staff to work 50 hours per week instead of 40. By typing in a 50 into that month, it adds 10 hours of overtime for each full-time employee. You and your trainer can then go back and do the analysis to see if it is more cost-effective to hire another part-time employee in July, and considering all the other hassles of doing so, or just paying the overtime. This next row, called Number of Fixed Labor Employees, should reflect the number of active employees for each month. Scrolling down a bit further, we see the grand total of our fixed labor costs. That also includes the payroll tax burden, as well as the various insurances that you may pay for.